What up, everyone? I guess you're all doing okay. My name is Goodwill Tulari. Let's just get into it. We don't waste any time. So, this is the financial accounting info. The focus is the income statement. That's what we're going to focus on. The income statement. The income statement is what we're going to focus on. So here I've already drawn up the accounts and everything that will be needed in the income statement. So this is our income statement, by the way. So the income statement, when we are given the income statement, we all know that we have to do what? We need to analyze. We go through the additional information, we check the information that is given. Relating to what? Relating to the accounts that they are on the trial balance. So nonetheless, let's just get into it. We have the inventory of 2000. Inventory. We have inventory of 2,165 bought was returned during the financial period. This is the purchase return. By the way, this question paper is for 2025. It's 2025 June. Yes. So we have the custom duty, 600 was still outstanding. Okay, we have inventory, we have rent income, we have credit losses, which is number 5. We have salaries and wages, we have salaries, we have sundry expense account, we have non-current asset, which is the depreciation, we have an allowance of credit losses, we have provision, provide the outstanding interest on loan. Okay, so nonetheless, let's go to the revenue. So we all know that we're going to start with our revenue. What is needed within the revenue? The revenue is also named as what? Sales or the turnover. So it has 3 names: turnover, revenue, and sales. So what must be subtracted within the revenue? You're going to subtract your settlement discount granted. You're also going to subtract what? The sales return. Let's just check and see if we have what I have mentioned. Do we have the settlement discount granted? Yes, this is the settlement discount granted. Do we have sales returns? Yes, we do have the sales returns. This is the sales returns. Let's key in amounts. Cost of sales, we're gonna open our bracket. Our cost of sales is what? Which is the revenue, is 478,000. 478,943. We less what? We less the sales returns, which is our sales return is how much? 10,800. And then we also less what? We also less the settlement. We also less what? The sales returns is 10,800. We also less what? The settlement discount granted, which is 10,000 rand. So this is the only things that you're going to subtract when it comes to sales. Settlement discount granted, and also what? And also the sales return. And then when you calculate those, they must give you 458,143. Let's go to cost of sales. The cost of sales, this is N4. The system of this is what? Is the periodic. It's a what? It's a periodic. They must tell you somewhere or this is a periodic system. So the periodic simply means to you that you will need to calculate the cost of sales. And then the perpetual, the cost of sales is given. Like go metric, we're doing the perpetual system, whereby the cost of sales is there. So let's check. Where is it? Yes, this is the periodic, as I've said. The periodic, we'll need to calculate what? The what you call this? we need to calculate what? The cost of sales. We do have the structure of calculating what? The cost of sales, which is opening inventory plus the purchase plus carriage on purchase plus import duty minus the closing. So from here until here is the structure of what? Of the cost of sales. You take your opening, you add the purchase, you add the carriage on purchase, you add the import duty, you less the closing stock. Everything here, this from here until here is the structure of cost of sales. You must know this by heart. You must know it by heart. So let's go and check if we have given this whole information. We are given this whole information. What you're going to start with, we're going to start with the opening inventory. So this is the opening inventory. You get what I mean? This is the opening inventory. The opening inventory is what? Is 13,708. This is the opening inventory. You get me? This is the opening inventory. 13,708 is what? Is the opening inventory. Let's go to purchase. The purchase is similar to sales, whereby you take the purchase amount, you less with the discount, a settlement discount received, you also less what? You also less the purchase return. Similar to this one, let's go and look at the amount of the purchase. The amount of the purchase, this is the amount of the purchase, which is 106,420. Let's key in our amount. 106,420 will less what? The purchase return. So the purchase return, it was where? It was on the what? The additional information. This one is the purchase return I even mentioned earlier. So we're going to minus 2,000 rand 165. We also less what? The discount, the settlement discount received. The settlement discount received. The settlement discount received is what? Is 64.20. I'm gonna say 64.20. And then when you add this, they must give you what? They must give you 97,835. Ne? Let's go to carriage on purchase. I never read anything about the carriage on purchase when you go to additional information. So this means what? We're gonna record the way it is. The carriage on purchase, this is the carriage on purchase, which is 4180. 4180. Nice, ne? Interesting. Let's go to import duty. The import duty, I've read about the import duty somewhere, ne? Somewhere. This is number 2. The custom duty of 600 was still outstanding for May and June. Ne? So this 600, ne? This 600 is for May and June. Don't take this 600 and then multiply it by 2. No, don't do that. Ne? So basically what they're trying to say is that your custom duty is 300. So when you say 300 plus 300, which is 2 months, again, for May is 300, for June is 300. All in all is what? Is 600. So they've already calculated for you. This 600, you take it the way it is. You don't multiply it with the months. You don't multiply with 2. You take it the way it is. Ne? So this is outstanding. We'll need to edit. So this one on the trial balance, which is the custom duty, which is 11,000. Open the bracket, 11,400 plus 600. Ne? So must give you what? 600 plus 400 is 12,000, right? So it must 600 plus 400 is 1,000, and then must be 12,000. So remember, you don't multiply it by 2. You take it the way it is. Then let's move to the closing stock. The closing stock is given. You're going to the closing stock, right? This is the format. I told you from here to here. This is the format. We take the closing stock, which is what? This is our closing stock. Ne? It's our closing stock. 103,723. We write it down. 103,723. Must be in the bracket. Always. So when you add this, you less this, must give you what? The 60,000 rand in brackets. So when you say sales minus cost of sales, they must give you what? The gross profit of how much? The gross profit of 398,143. Ne? So let's go to operating income. The operating income, the focus on the operating income, you're going to look at your trial balance and then you look what? On your credit side, this side. You look at your credit side. Ne? You look at your credit side, this side. You're going to get your what? You're going to get your the incomes. Ne? So you can see that our incomes, the settlement discount received, you cannot, this one is out. Ne? This one is out. This one is also out. This one is out. Ne? And then the settlement, we have what? The credit losses recovered. Ne? 13,800. Credit losses recovered. This is the bad debt recovered. Ne? This is the bad debts recovered. We received the money from our debtors. The people that they were owing us, they decided, some of them, they decided to pay us. Ne? So they paid us how much? 13,000 rand 800. So this is the amount. What also on the credit side? This is the credit side. Remember, this is the credit side, this is the debit side. The credit side, you'll find all the incomes. The debit side, you'll find all the expenses. So we have what? We are given 24,000 as what? As the rent income. Ne? So the rent income, I've read about the rent income earlier. Ne? I've read about the rent income somewhere. So they say to us that the rent has been received up until 31 December 2023. So our financial period ends when? Our financial period ends on the 30th of what? Of June. Eh? That's when our financial period ends. And then if the financial period ends on 30th of June, it literally means that it started when? On the next month. The next month of June is what? Is July. If the financial period ends on September, the next month of September is what? Is October. So meaning the beginning of the year is going to be October. And then if the financial period ends at December, the beginning of the month is going to be what? January, the next month. Ne? If the financial period ends come March, ne? The beginning of the financial period is going to be what? Next month. March. What is the month of what is the next month of March? It's what? It's April. So if it ended come March, or ka April. If it ended ka February, the next month of February is what? Is March. Or the beginning is going to be what? March. So here it ended when? 30 June. The next month of June is what? Is July. Meaning this financial period starts when? July. 1 July 2023. So I'm going to come here and then I'm going to calculate this thing. So we're going to firstly do what? We're going to firstly draw our financial period. Ne? We're going to firstly draw our financial period. So let's calculate the rent. Ne? So this is our financial period. It ends when? 30 June. 30 June 2023. Thomane ka di 1 January, June, July, ne? July 2022. Is it 2, ne? Or is it 4 here? Let me go and check, ne? I'll come here. Where is it? The financial period is when? 2024, ne? Okay. So it's 2024 here. It's 2024 here. June 2024. is 4 here, then here is 3. Ne? So what they literally mean that let's go and check what? Let's go and check our rent. Ne? Our rent was received up until December. Ne? The rent has been received up until December 31, December 2023. Right? And then let's go and check the rent for trial balance. The rent for trial balance is how much? Is 24,000. This is the rent, ne? 24,000. So let's go and do it. So now we have 24,000 as the rent, and then we're going to divide by, from July again, we're gonna count July, August, September, October, November, December. So how many months? Is 1, 2, 3, 4, 5, 6. This represent the amount on the trial balance, which is 24,000. It represents what? 6 months. This is the money for 6 months. And then if we count there, if we say 24,600, if we say 24 divided by 6, you must come with the total of how much? Let's see, 24,000 divided by 6 gives you 4,000. So this is the money for what? For a month. This is money for a month. So the outstanding is 6 months. I agree, you know what? This is 6 months, this is 6 months. So 6 plus 6 must give us 12. So on the trial balance, everything that is on the trial balance must be what? Must be 12 months. Everything or anything that exceeds the financial period, you're going to subtract. Everything that is under the financial period, it didn't reach the financial period, didn't reach the end of the month, which is 30 June 2024, you're going to add. But if the month exceeds, you're going to subtract. So this one, it didn't reach the financial period. It has 6 months outstanding to reach the 30 June 2024, which is what our the end of the financial period. So the outstanding month is how much? The outstanding month is 6 months. So we are looking for this 6 months. We're gonna say multiply by 6, and then we know we're gonna get what? We're gonna get 24,000 as also. We're gonna get 24,000 as also. So 24,000 6 months, 24,000 6 months. So this is how we adjust the rent income. It was received for only 6 months, and then the outstanding is 6 months. So that's how we're going to do it. I'm going to erase here. So that's how we do the rent. So that's how we do the rent. So we're going to record it. We're gonna record it. How are we going to record it? We're gonna say, what is the rent? We're gonna open the bracket here. We say 24,000 plus 24,000, which is 48,000. That's how it will look like. And then we only have these two incomes. So when we add up these two incomes, they must give us what? They must give us when we say 13,800 plus 48,000, the credit losses and the rent income, you must get the total of what? Operating income, which is what? Your operating income is 61,800. And then when you say the gross profit plus operating income, they must give you what? The gross operating income, which is what? 459,943. 43. So let's move. We move to the operating expenses. We have what? We have the operating expenses. There must be what? There must be on your debit side. Okay? So this is your operating expenses must be where? On this side, on your debit side, ne? Debit side. This is your operating expenses. This is where you're going to get your operating expenses. Ne? So let's go. We can start with the carriage on revenue, ne? For the 3020. This is the carriage on revenue for the 3020. Let's key for the 3020. Let's go to salaries. The salaries, this is the salaries. They said to us that the salaries were paid for 10 months only. When they say this was paid for 10 months only, it means that this money for salaries, this one, 173,800, this one, 173,800 is for only 10 months. So don't forget what I've said about the trial balance. It must be what? It must be 12 months. Ne? It must be what? 12 months. Ne? That should be our our trial balance. So everything that is exceeding our financial period, 13 months and above, you will need to subtract. And then if it's 11 months downwards, you will need to do what? You will need to add. So since that one of the rent income, it was 6 months, that was the reason why we added. Because of the outstanding, it was what? 6 months. So 6 months is 12 months. So this one is 10 months. The outstanding is what? Is 2 months. So the calculation that we're going to do, the amount that we're going to get, it will add up with this one of 10 months. And then it's going to be what? Plus 2 months. The amount that you're going to get. We're going to calculate the amount for 2 months. And then we're going to add up with this one. Ne? So let's go and calculate. Let's go and calculate. Salaries were paid for 10 months only. Note on 1 May 2024, salaries were increased by 10%. So the financial period is very important. Ne? It's very important. So we're going to key in our financial period. So this is our financial period. We know it ends when? It ends 30 June 2024, 1 July 2023. Ne? So they say to you that the salaries were paid for 10 months, ne? So meaning the 2 months is outstanding. Ne? Meaning these 2 months is outstanding. This one is outstanding. May and June is outstanding. So we want to calculate these 2 months. Then we're going to add up with that one on a trial balance. Let's see. So they say to you that the salaries were paid for 10 months. So note on 1st of May, salaries were increased by 10%. Okay. So the salaries, the amount of salaries on the trial balance is how much? Where is the salary? Salaries is 173,800. 173,800. So this represent what? The 10 months. I guess they told us this is for 10 months. So since it's for 10 months, we're gonna say divided by 10. We want to know we get or is what? We're just gonna cancel this 0. So it's 17,380. So basically, we are paying the salaries 17,380. We paid them 17,380 July, 17,880 August, September, October, November, December, January, February, March, April. So for this period, ne, we're paying them 17,000. We're paying them 17,380. Ne? Then from here, which is May and June, the salaries were increased by 10%. We're gonna say multiply by 110 over 100. Ne? That's the shortest way. Ne? You're just gonna do like this. And then when you say 17,380 380 multiplied by 110 over 100. You get 19,118. So starting from May, we paid them 19,118. May and June. Don't forget that this is the outstanding months. Don't forget this. These are the outstanding months that we are looking for. So they were paid 17,380 from the commence of the financial period, which is the 1 of July, until here, until April. They were paying 17,808. They were paid 17,808. But ka di 1 May, they said to us, or the salaries were increased by 10%. Starting from when? Starting when? 1st of May. 1st of May here. 1st of May here. It was increased by 10%. So this amount was increased by 10%. And then basically, this is the 2 months that we are looking for. This is 2 months that we are looking for. So this one's 19,118 is for a month. It's for May. And then you can say plus 19,118. I get again May. This is May. This is June. Or you can even say 19,108 multiplied by 2. It's up to you. So when you add this up, it must give you 38,236. 38,236. That's how you're going to do your salaries. So what are we going to do with this 38,236? We're going to add it with that one on the trial balance. Don't forget, or this one is for 2 months. And then on the trial balance, this one on the trial balance, which is 173,800, is for how many months? 173,380 is for how many months? For 10 months. You get me? For 10 months. So you see, it's 2 is 10. Yes, they add up together, which is 12 months. So we're going to add this one for 10 months with what? With this one for 2 months. They must give us what? 12 months. That's the purpose of the income statement. Everything, there must be exactly 10 months. I mean, it must be exactly 12 months. You get me? So you're going to say 173,380 plus 38,236. That's how you're going to do it. So how are we going to record it? We're going to say open bracket. We're going to say 100 and bani, 178,000, 173,800 plus 38,236. That for 2 months. So this is 10 months. This is 2 months. They are added together, give us 12 months. This one for rent income, 6 months, 6 months is 12 months. So salaries, the total for salaries must be 212,036. And 36. Let's go to the sundry expense. The sundry expense, where is it? Before we go to the sundry expense, we jumped this one for credit losses. We jumped it, We jumped this one, the credit losses, I'm just gonna edit here. Credit losses. I'm just gonna edit here, Credit losses. Let's see what they say about the credit losses. So the credit losses, also known as the bad debts, So the credit losses on our trial balance is 16,108. This is the people that they are owing us. These are the people that they are owing us. So they are owing us how much? 16,108. But when we go through our books, when we go through our additional information, we get that there is someone or there is other people that they are still owing us. They are still owing us 4,800. So literally, this is not the amount that these people they are owing us. This 16,108. It is literally not the amount that that these people they are owing us. So what we're gonna do, we're gonna say 16,000. Is it 16,000 or is it? Yes, 16,130. 130. This is the amount. This is amount. 16,130. Again, 16,130. And then we're gonna add with what? With the credit losses. It's always like this, add with this one. Plus 4,800. This one. 4,800. They must give you 20,000. Must give you, I'm just gonna go up, 20,930. It's just like that. So now let's continue with our sundry expense. Our sundry expense. Let's continue with our sundry expense. So our sundry expense, they say to us that the sundry expense account includes an amount of 24,000 for an annual bonus which was paid up until 30 September 2024. And then financial period 30 June 2024. So let's go. This is our financial period. If you be good with this thing, you're gonna go far. So this is 30 June 2024. Again, and then you're tomaning kadi 1 Jan March. July, July 2023. So what it was received up until when? The 30 just September. 30 just September. 30 just September. Why born again? 30 just September. 30 just September. Let's go down to bring our trial balance down. 30 just September. Again. So this is June. Again. July, August, September. Kana gila karengi kare everything that exceed our financial period to do what? We subtract. Everything that is under financial period to do what? Under. They didn't reach the financial period. We add. So here you have some glory. Any amount or the amount that you're going to get, we're going to subtract it because of it exceeded our financial period. What I told you about the trial balance, 12 months. And then this one you can see it's 12 months from here to here, and it is 12 months. 12, 13, 14, 15. So we must minus these 3 months. We must minus these 3 months. I got it nearly 15. We must minus these 3 months so that we can get what? 12. So let's see. So they gave us the amount of the annual, which is 24,000. 24,000. It's annual. You divide it by 12. It's annual. It doesn't mean just because of this is a 15 months and then you will need to divide it by 15. No, you divide it by 12 because of its annual. Let's check. When we say 24,000 divided by 12, you get 2,000. So, ka kgwedi ke 2,000. Per month is 2,000. It's 2,000 rand. So, 2,000 from July until the 30 just September. This is 30 September. 30 September 2024. So 1, 2, 3. This is the 3 months that I'm talking about. So these 3 months we paid them in advance. We paid them in advance. So 2,000 multiplied by 3. So it's equals to 6,000 rand. Interesting, ne? So this 6,000 rand, we will need to do what? We will need to subtract it with the one that is given on our trial balance. The reason why we subtract, because of this thing from here to here is 15 months. And then Tina, we want what? We want only 12 months. So it's 2,000 here, it's 2,000 here, it's 2,000 here. I get, so these 3 months, it's 2,000. I get 2,000, 2,000, 2,000, 2,000. Get 6,000. So we're going to subtract it. Then our financial period is going to give us 12 months when we subtract these 3 months. So these 3 months is how much? 6,000. So we're going to subtract again so that re kgone go shala ka 12 months. Again. So 24,000 divided by 12. Again, when you divide it by 12, you want to know what per month. How much is the money for a month? Ne? How much is the sundry expense for a month? Is what? Is 2,000. You don't divide this by 15, I repeat. You divide it by what? By 12. Because of we've been told that this 24,000 is for annual. Annual is 12 months again. Yes. So 24,000 divided by 12 is going to give us 2,000. And then this 2,000 we know is per month, 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 per month. Ne? So we're going to less this 6,000 from the amount that we got, ne? From the amount that we got on our trial balance. So I will erase here. I guess you write also the steps, ne? Write the steps. They are going to help you go examine ya gago, ne? They're going to help you. So I'm gonna erase here for the sake of space, ne? So I'm gonna erase here. So we know the amount is 6,000. What you're gonna do, we're gonna less the 6,000, ne? So that's what we're gonna do. We're gonna less the 6,000 rand, ne? So let's go and less. What is the amount for sundry expense? The sundry expense, where is it? This is the sundry expense. It's 86,220. Let's go. 86,220. We less what? 6,000 rand, ne? And then it gives us what? It gives us the what? When you say 16,000, when you say 82,000, 86,220 less 6,000, it must give you what? It must give you, let me punch it, 86,220 minus 6,000 must give you 80,220. Is it 80,220? Let's go to depreciation. Let's go to depreciation. Where is the depreciation? This is our depreciation. The non-current assets must be depreciated as follows. Equipment 20%, vehicles 15%. Note, a second-hand vehicle 40,000 was purchased on the last day of December. Ne? Let's start with it. Let's start with it. This is our financial period. I write a financial period. Ne? Very simple, man. This 30 June 2024. 1 July 2023. Ne? So bara ba rekile neng vehicle, bara ba rekile ka di 31 tsa December again. So bara vehicle depreciate ka 15% on cost again. So bara ba rekile ka bokae? Ka 40,000, ne? Ka neng? Ka December. 40,000 ka December. 40,000 ka December, ne? Multiply by what? Is it 15 or is it 20? It's 15, ne? Let me be sure. Yes, it's 15. 15 over 100, ne? So this is still new, guys. You don't subtract it with anything. This vehicle is still new. Away minus 0. When I say multiply by, so it was bought on the last day of December, meaning it's going to be active next month. And it was bought on the last day of month, meaning what? It's going to be active when? On the next month. If by raga today, got 31 December, you'll be active in January. So when we count, we start from January. So just gonna assume January is here. January, February, March, April, May, June. Ne? So it's 1, 2, 3, 4, 5, 6. When I say 6 over 12. So let's punch and see. 40,000 multiplied by 15 over 100 multiplied by 6 over 12. Get 3,000 again. So we know we have 3,000 as new. Again. So let's go to old. So when we calculate old, what we have to do, we will take these vehicles, ne? We'll take these vehicles of 170,000. Again, we're gonna take that one. So don't forget, or we calculate what? There is this thing that we use is for sun, ne? Sun. S stand for sold, O stand for old, new stand for, N stand for new. S for sold, O for old, N for new. So we calculated for new, and then for sold we don't have. Old is going to always be there. This one is for 12 months. Ne? It's for 12 months, this one. These are the vehicles that they were there in the business for 12 months. For 12 months. Keen wait, for 12 months. For 12 months, ne? This one for old. Let's calculate. So this equipment, ne? This equipment, where is the equipment? This is the equipment, ne? Not equipment, vehicles. These vehicles of 170,000, ne? They include this 170,000. They include the vehicle that was bought on the last day of what? Of December. At the 20th December. Again, we minus. The reason why we minus is because of we want to calculate the depreciation of the vehicles that they were there for 12 months. So this vehicle of 40,000, it was there for only 6 months, not 12 months. So this is the reason why we take it out. So we will be left with the vehicles that they were there in the business for what? For 12 months, which is 130,000. So this 130,000, this is the vehicles that they were there in the business for 12 months. 12 over 12 divided by 15 over, multiplied by 15 over 100. So you less this 40,000 because of it was not there in the business for the whole year. When you calculate the depreciation for old, this is the depreciation for old. And then this one is for new. Ne? So when you calculate the depreciation for old, you calculate the vehicles that they were there in the business for 12 months. So this one, you less it, you subtract it because of it was there in the business for 6 months. This is how you're going to calculate the depreciation. 130,000 multiplied by 15 over 100, because of 12 over 12 is just what? It's just 1. So we get what is how much is 19,500. 19,500 again. Yes. So this was the equipment. So let's calculate this was vehicle. Let's calculate for equipment. So by the equipment, again, get diminishing balance method. Again, diminishing balance method, do you know is what? Is cost. I'm just gonna hang it here because I don't have space. It's cost minus accumulated depreciation. Again, so more equipment they didn't buy, they didn't sold. Ne? They didn't buy, they didn't sell. So our son it's just gonna be what? The old, because of this one we don't have, new we don't have, sold we don't have. Again, so let's go and check the cost of the vehicle. The cost of the equipment. The cost of equipment is what? Is, where is it? Mara skachur. Equipment. This is the equipment, ne? This is the equipment. So 157,800. You less accumulated depreciation, which is assured 17,800, 17,800, and then it's going to give you the answer. Let's see, 157,800. You minus 17,800, you get what? 140,000. multiply by 20 over 100 because of being told that the equipment again get 20% and get on diminishing. So we get 28,000. Okay? So that's how we're going to do it. Okay? That's how we're going to do it. That's how we're going to do it. So when we go furthermore, we're going to add this whole thing. I'm going to say 28,000 plus 3,000 plus 19,500. 19,500. Let's go. 28,000 plus 3,000 plus 19,500. You get 50,500. This is the depreciation. I'm gonna come here and then we write again. You know, retro edang 28,000 for equipment plus 3,000 for new plus 19,000 for old of vehicle, ne? And then it give us what like a read. I was supposed to write ka blue, ne? So it's 50,500. Allowances for credit losses. Let's go to allowances for credit losses. We go to allowances for credit losses again. So Barenge create an allowance for credit losses at 8% of the trade and other receivable. So now if they say to you, if they say to you create, if they say to you, always they only say to you or create, just know what is going to be under your operating expenses. But when they say adjust, that's when you will see what is it. It can be income, it can be expenses. But when they say create, it's always in the other operating expenses. So this is the reason why I wrote it under the operating expenses. So the method of this, you know what is what? Is trade receivable, TR, trade receivable minus amount written off. Again, amount written off. Again, yo, like one handwriting yak. Get the chartered accountant. So let's go and check them. The total again, the trade receivable. The trade receivable is what? Is 148,800. Anger 148,800. 148,800. 148,800. You less with the amount written off. Ne? Go kai go the adjustment. Go the adjustment. Let's go. Amount written off go the adjustment. Ashi 4,800. Ash 4,800. Why one? Let's go. 4,800. Again, we get how much? 148,800 minus 4,800. Again, we get 144,000. Just like that. Multiply by percent. 8, yes, this is 8. 8%. 8%. Say multiply by 8 over 100. 11,520. Yes, this is it. I'm even tutoring. If you want some service, you can text me. Can text me. My numbers 064 64 44 544. 064 64 44 544. Ke goodwill. Ke goodwill. You can text me or you can call me. So this is what? This is the 11,520 for what? For the allowance for credit loss. Just gonna write it. Where is the marking pen? Just gonna write it. As marking pen in so it's 11,520. This is our answer for credit losses. Let's go. I'm gonna erase here. 064 64 44 544. That's my number, if you want some tuition. So 11,520. I erase. Ke a phumula. Yo, my way, ke a phumula. So let's go up and then see what we have. So what we have the stationary. Stationary, we don't have additional information for stationary. We're just gonna record it the way it is for stationary. We have 5,914. And then for packing material, I saw it here. So this is the packing material on hand. So you know what we do, what we take the packing material, which is 12,000 minus 2,277. So it's the stationary 5,914. You less with this one 2,227. Your 12,000 minus 2,277. Your 9,723 again. So this is the all expenses that we have again. So when you calculate these all expenses, they must give you 433,543. Ne? So it must be in the brackets to show this is the expenses again. It must be in the brackets. So we have what we call the financial cost, which is the interest on loan again. Financial cost, we're gonna have what? Interest on loan. So this one likes to be down there. Provide outstanding interest on loan. When they say provide outstanding, just know that there is what? There is that interest on loan that was paid. Ne? The interest on loan that was paid. Ne? There is an outstanding amount. Yeah, short. Ne? Yeah, short. So know the interest rate of the loan from ABC Bank was increased by 2.7 on January. Ne? Let's do it here, down here. Financial period. It's very important. 30 June 2024. Tomaning 1 July 2023. So it was increased by 2.75. Let's see what available guy shall I increase by 2.75. Let's check what available guy. So loan 11% again. This is loan 11% again. So what you're gonna do, we're gonna say 11 minus 2.75 again. So we get what available guy 8.5 ne. So lunar night available guy 8.75. 8.25 I mean to say. So this is our loan. So it was 8.25 from here, 8.25 again at our financial period beginning. 8.25 again. Then bareka the 1 January increase again. We can just assume the 1 January demo. January, February, March, April, May, June. More. January, February, March, April, May, June. So this is exact 6 months. So bara increase ka 2.75. I sale 8.25. Increase ka 2.75. Or re tlo ba 11% from here until the end of the financial period again 11%. And then so meaning what ka di 1 July. On the 1st of July until December, available 8.25. So the loan what is the amount of loan? The amount of loan is what? Is 240,000. Can you see it? It's 240,000. Let's go. So 240,000 multiplied by 8,5 over 100 multiplied by, again, multiplied by 6 over 12. Why I say 6 over 12? Because of this 8,25. It was not there for the whole year. It was there for 6 months. July, August, September, October, November, December, which is 6 months. July, August, September, October, November, December. I get 1, 2, 3, 4, 5, 6. E be 8,25. Then ka January go thoma mo ka January go fihla mo le yona ke 6 months. Ka make 6 months, ka make 6 months. Go tloga mo go fihla mo ha e sale 8,25. From here until here is no longer 8,25. It's how much? Is 11%. It was increased by 2,75. I get it? Let's go. 240,000 multiplied by 8,5 over 100. Multiply by 6,12. Guy 10,200. And then arbone the percent increase again. Increase guy, it increased by 2,75. So it's no longer 8,7. It's no longer 8,25. It's now how much? 11%. Again, it's now 11%. So it increased by 2,75. So we're gonna say 240,000 multiplied by 6,12. 6 over 12 multiplied by what? Multiplied by 11 over 100. So that's how you're gonna do it. Is it not 240, not 200,000? 240,000 multiplied by 6 over 12 multiplied by 11 over 100. Yeah, 13,200. 13,200. So you're gonna add up these two, 10,200 plus 13,200. You must know what ne? You must know what 10,200 plus 13,200. You offer 23,400. So this 23,400 is the amount for the interest that it was supposed to be paid. So we were supposed to pay 23,400. Let's go and check on how much we paid on the trial balance. Interest paid. Where is it? Interest on loan. So we paid how much? We paid 24,800. We paid 24,800. 24,000. Interest on loan 24,800. So 24,800 is the amount that, is it 24,800? Something doesn't make sense here. 24,800 and then I have 23,800. So this question paper, I think there is a mistake. How can they say to us this is an outstanding? Provide an outstanding of interest on loan. So how can it be the outstanding? Because of this is 24,000. Can you see it? It's 24,800. This is the amount that we paid. But this means like literally we were supposed to pay 23,400. So you can see it doesn't make sense, right? Doesn't make sense. So this is not outstanding. So basically this is the amount that we were supposed to pay. 23,400 is the amount that we were supposed to pay. But on our trial balance we paid 24,800. So why they are talking about outstanding? Because of we paid over. So there is no outstanding here. There is no outstanding unless if they say to us that like we need to correct the error. If on the trial balance they recorded this 23,400, and then when we calculate and then record 24,800. That's when we can say yes, it makes sense. There is an outstanding because of the amount that we should pay is 24,800, but we paid 23,400. That's when we can say there is an outstanding. But if we paid 24,800 and then we were supposed to pay 23,400, doesn't even make sense, ne? It doesn't even make sense. So we're just gonna record this amount, 23,400, and then that's what that. So le bana ke batho ba ira di error, ne? 23,400. 23,400 must be in the brackets, and then also this one must be in the brackets. So you're gonna say gross operating income 459,943, you less 433,543, and then you less 23,400. 459,943 minus 433,543, you less 23,400 must give you the net profit. Net profit of 3,300. So this is your income statement. Thank you so much.